If there's one thing June is telling us, it's this. Growth is no longer happening in just few places. It's happening across industries, across sectors, and across the economy. Welcome to Bank of Kigali's June Market Insights. Now let's break down the story shaping Rwanda's economy this month. Let's start with BK. Bank of Kigali recorded a profit after tax of 26.1 billion Rwandan francs in the first quarter of 2026, representing a 3.5% increase compared to the same period last year. But beyond the numbers, BK is putting more money where growth is happening. BK is taking deliberate steps to expand financing for SMEs and the agriculture sector, helping businesses across the capital access the capital they need to scale, invest, and create jobs. Now let's talk transport. This month, Bank of Kigali partnered with Numa Logistics and Kabisa to support the expansion of electric trucks in commercial transport. And no, this isn't just about being environmentally friendly. It's also about economics. Electric trucks are expected to reduce fuel and transport costs, improve supply chain efficiency, and help businesses move goods more affordably across the country. For farmers and traders especially, lower transport costs can make a big difference to profitability. In short, less fuel, lower costs, more efficient movement of goods. Now, let's look at the latest economic updates. Rwanda's economy grew by an impressive 10% in the first quarter of 2026. Services remained the largest contributor to GDP at 52%, followed by industry at 24% and agriculture at 19%. But here's what makes the numbers interesting. Industry grew by 13%, agriculture grew by 8%, and services grew by 7% year-on-year. So what does this mean? Growth is no longer coming from one corner of the economy. Industry is building, agriculture is producing, services are expanding. It's a sign of broader-based growth rather than dependence on a single sector. For businesses, that creates opportunities across multiple value chains, from manufacturing and logistics to trade and agribusiness. Now, let's talk prices. Inflation is likely to 12.9% in May, down from 13% in April. It's not a dramatic drop. Nobody is taking a victory lap yet. But it could be an early sign that inflationary pressures are beginning to stabilize. What does that matter? Because businesses love predictability, more stable prices make it easier to plan, budget, and invest. And over time, consumers benefit too through improved purchasing power. Lastly, let's talk confidence. Rwanda secured a $250 million financing package from the International Monetary Fund, with an immediate disbursement of $35.7 million to launch the program. This funding is designed to strengthen economic stability, support private sector-led growth, and help Rwanda navigate external economic shocks. Think of it as an economic insurance. Hopefully, you never need it, but you're glad it's there. So whether through stronger financing innovation or economic growth, one thing is clear. Rwanda's economy is becoming more resilient, more efficient, and more investment ready, with opportunities continuing to expand. This concludes June's Market Insights from Bank of Kigali. We'll be back next month with more market updates, economic trends, and hopefully a little less inflation.